Today, I want to explain what Aron just said about the reverse split and why it's good for the squeeze. But first, I want to cover one very important thing that Aron neglected to mention, which proves he may not be doing everything he can to help the apes. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, first let's explain what Aron has just said and then touch on what he's neglected to say. So Aron tweeted saying some misunderstandings of the 1-for-10 reverse stock split, approved by 87% of March 14th votes, saying that we're stealing 90% of your shares. He said you forget the share price also rises tenfold at that time, exactly the same as trading 10 $1 bills for one $10 bill. Either way, you've still got $10. Now this technically isn't true because obviously Ape is also converting into AMC and then the reverse split is going ahead. So instead of the share price rising tenfold, the share price will likely raise between 3 to say 5 or 6-fold. I think it's important to remember that while 90% of the shares and technically 90% of the number of synthetics do disappear, the remaining synthetics still increase in value tenfold as well, and therefore the total value of outstanding synthetics is still the same. And you also said in your comments some fear that after a reverse split, short pressure could cause the price to go back down, but you neglect that it is every bit as easy to short a stock priced at $3 as it is to short a stock priced at $30. He said a reverse split itself has nothing to do with any subsequent price afterwards. Now I want to explain why this is true and if anything why it's actually easier to short a stock priced at $3 than it is to short a stock priced at $30. But first, let's mention the glaringly obvious part that Aron neglected to mention. As Wall Street Apes tweeted, he said, what about all of the predatory short selling, off exchange and dark pool abuse, robbing all buying pressure that resulted in AMC dropping from $72 to $4 per share? Aron has neglected to mention the reason why AMC is performing this reverse stock split in the first place, and that's because of the price dropping from $70 per share down to between $3 to $6 per share, solely caused by stock manipulation. Wall Street Apes tweeted saying, how can you ignore this? Nothing has changed in market fairness, and we know the daily off exchange or dark pool volume is 70 to 80% of total trading volume. How can this still be ignored? And he said, how did AMC get taken off the threshold securities list a few weeks ago without anything happen that would allow it to be removed? What about the glitches in data, in price, in market capitalization and in float? And what about the impossible short volume? Aron is obviously enacting this reverse split to try and re-increase the price of AMC, but what he hasn't done is called out this fraud and taken anyone to court yet. Aron is trying to improve the stock's price and improve AMC as a company, but he's not resolved the underlying issue, which is the AMC manipulation. I think it's all well and good improving AMC as a company and performing a reverse stock split, but if you don't resolve the issue in the first place, if you don't resolve the source of the problem, it will just continue happening again. Yes, it is actually easier to short a $3 stock than it is to short a $30 stock, but if the root of the problem was resolved, we wouldn't have to worry about shorting at all. I've said time and time again that maybe Aron is doing something behind the scenes, but he just hasn't told anyone about it. And I think the longer that goes on, the longer Aron refuses to do anything about the ongoing fraud, the worse it gets for AMC. However, it does seem that could actually soon be solved as a US representative, Warren Davidson, plans to file legislation to dismiss SEC chairman Gary Gensler. Obviously, if Gary Gensler is dismissed and somebody takes his place that doesn't currently or previously work at Goldman Sachs, something might actually get done. As long as Ken Griffin doesn't become the new SEC chairman, I imagine that manipulation could be reduced significantly in the overall market. But let's talk about why it's actually easier to short a $3 stock than it is to short a $30 stock. Now you may have seen this tweet or this reply from Spence, and I want to explain why it's not actually the case. Guys, be sure to join me over on Moon with the sponsor of today's video by signing up using the link in the description below. You can currently get up to a whopping 15 free stocks, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use, it's very clear and simple, they've got tons of technical indicators and advanced charting tools. And with Moomoo, you've also got entirely free 24/7 customer support, and you could also trade around the clock with the full extended trading hours. Spence tweeted saying that actually buying pressure will fall through the floor as retail investor demand will fall for a stock over $10 per share. He's basically saying that if AMC performs this reverse split, the stock will become too expensive and retail investors won't want to buy more shares. But actually, I want to explain using the AMC chart why this actually isn't the case. As you can see from the chart, through most of 2020, when the price of AMC was between $1.22 per share and $4.76 per share, there was very little buying volume on AMC, and that's why the price continued to fall. However, when the price of AMC finally breached this $4 and $5 region and begun setting new highs, the price of AMC absolutely rocketed regardless of actual share price. We can obviously see from the volume, there was tons and tons of buying volume on that date on 27th of January, even though the price of AMC was upwards of $10 per share. Again, through the first half of 2021, when the price of AMC was between $3.45 and around $9 per share, there was very little buying volume once again. But then as soon as AMC broke that $8, $9 and $10 region, the buying volume in AMC absolutely skyrocketed regardless of the price per share. There was so much buying volume between the 26th of May and the 2nd of June that the price of AMC absolutely skyrocketed regardless of the price per share, so much so that I actually have to continue scrolling upwards. We can see that when AMC was between $3 and $8 per share, there was very little buying volume, but there was tons and tons of buying volume at $40, $50, $60 and $70 per share. The same can be seen through the remainder of 2022 as well. As the price is falling, there's very little buying volume, but as soon as the price per share goes upwards, there's tons and tons of buying volume. So actually, if anything, investors are more likely to buy with a higher price per share than they are with a lower price per share. And therefore, again, if anything, AMC is actually more likely to squeeze after the reverse split with a higher price than it is without the reverse split or before the reverse split with a lower price. So again, even though with the reverse split, you have 90% less shares and 90% less synthetics, those synthetics are valued at 10 times the amount. And therefore the shorts are still up to their eyeballs in synthetic shorts, and the price of AMC goes up, making retail investors and other investors more likely to buy the shares, pushing the price up even higher. And therefore that actually makes it harder to push the price down on a $30 stock than it does to push the price down on a $3 stock. On top of that, not only is AMC more likely to sell shares at a higher price per share, we already know the float of AMC is held multiple times over. As Dave Murphy tweeted, he said on June 2nd, 2021, AMC closed at $38.43 per share. AMC issued a PR statement stating that more than 80% of AMC shares are held by a broad base of retail investors, with an average holding of around 120 shares. And he asked, do you currently own more or less than 120 AMC shares? And we can see with 6,110 votes, there's a resounding yes answer with 93% of voters voting yes. That means that if anything, since January of 2021, the number of retail investors holding more than 120 shares has increased significantly. And those retail investors are holding significantly more than 120 shares as well. That means again the float is likely sold multiple times over as these retail investors have accumulated more and more and more shares over the last 2 years. As Stonks Batman has tweeted, he said a reminder for everyone, short interest is currently at a record high for AMC, while simultaneously having a record high short borrowing fee, approximately 1,000%, and it's been put back on for the second time this year on the threshold securities list. Again, as of Friday, AMC has now reached its third day on the NYSE Regulation SHO threshold securities list, while having an ever-increasing number of FTDs and 100% utilization and a record high short borrowing fee on top of everything else. This obviously goes to show the shorts have been digging themselves a deeper and deeper hole, especially over the last 6 months to the last year. Everything has been building up against the shorts, and as the price of AMC increases, it's likely that more and more retail investors and more investors as a whole will buy even more shares, again pushing the price up. We can see from this chart, looking at the volume and looking at the price together, that whenever the price does increase, volume always follows. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.